Capital investment to speed up decarbonisation is scarce, yet significant investments are needed to ensure a balanced grid. What we need is to facilitate smart capital investments in the right technologies. Louis, thanks for joining us here at Enlit Europe. Let's unpack that need to focus on smart capital investments to drive decarbonisation. What are the steps?
Thank you, Ross. Well, to start with the steps, we need to start with the numbers. And we're talking of a lot of money that's needed for the energy transition. If we talk about money, depending on which source you use, you're talking of at least $1 trillion of investment in renewable energy, 500 billion in grids, and another 100 billion in flexible technologies. Now, that needs to happen every year to get to the energy transition that everybody wants to get to. That's not going to be easy. So, if we take that down to smart capital investments, what does it mean? It means that you have a big drive on your energy transition side and you're changing your power mix. So you're moving to much more renewable energy. But that alone is not going to drive it. So we need to get to the key other jobs to be done. The one is stability and availability of electrons. And for that, you need a lot of flexibility coming into the system. And the other side of it is the economics. There's a time value associated with this. And you can't simply be spending in terms of your programs and in terms of your green objectives without actually focusing on the economics. And that means we need to be incredibly scarce with our capital and use as little as possible and in the smartest place to actually make it work.
Okay, so we've got two ambitions here. We want to reduce costs and boost flexibility. What are the technologies do you think that need the most investment?
That's the interesting thing. Many people love focusing on one or two technologies and saying you can sort out your grid with that. It just simply doesn't work like that. Every country has its own dynamics. Every country has its own opportunities for balancing. What we can see is that a lot of the technologies are good at one or two jobs and they're okay at other jobs. What happens often is that people just select the good jobs and say, here's box one, this technology fits well there, but it doesn't look at everything the technologies can do. For example, what we're seeing from the Wartsila side with our engines, they are being required to run multiple jobs in a day. You're stopping, you're starting, you're ramping, you're participating in ancillary services markets, you're balancing. It's becoming much more complex. The one thing is clear, there is no silver bullet here. There's multiple technologies, but it is really important to pick the right ones for the right jobs and to understand that you can use them in a portfolio of solutions.
So you mentioned that different countries have different circumstances, but they all have policies, and that's often the driver for investments. What are the policies needed that can be applied everywhere that are going to drive this investment?
Very good question. So I think that the challenge with the policies is twofold. The one is in terms of market structure. We have to get more granular. If you don't move below the 5-minute intervals in terms of settling your markets, you are overspending on assets. Why do we say that? Because at 15 or 30-minute intervals, you can't see all the jobs that the asset needs to be done. And then you end up compartmentalizing and you start having separate markets for other jobs. In the system perspective, you have to run at 5 minutes and below. And that's tough. Some markets have made that move. You can see it in Australia, you can see it in the UK, you can see it in the US. Europe is moving down to 15, and hopefully they'll start moving down even further from there. But it is crucial to get those market dynamics right, because otherwise you pick up the wrong assets. And we can see with the engine portfolio again, the under 5-minute market is where the decision making starts shifting. If you're at 15 or 30 minutes, you're buying other technologies which will leave you stranded at some point or which will cost your system more. But there's another aspect, and that is policy pragmatism. It's always very nice to compartmentalize things into the green box and the not green box. And that's fine on a technology by technology basis. But when you're talking about flexibility and it is systemic, it runs right through the system, it is not that green and black. There's a lot more nuances in this. And there's a lot of tension between the real economics behind this and the environmental targets we're setting ourselves. And if you look at one in absence of the other one, then you're going to have a lot of conflict. And at the end of the day, your system is going to cost more. Just to bring it back to the numbers I mentioned in the beginning, it was $1 trillion for renewables per year. It was 500 billion for grids. And it was another 100 billion just for flexibility. Now, if we actually need to make this transition affordable enough so that it can actually happen and happen quickly, we need to be much smarter about the investments. And that's where we need to bring in the right assets at the right time in the right mix.
You've summed it up well. It's all about nuance, but the devil's in the details. Thanks very much for your insights. For more insights, be sure to join the Enlit community.